Alarm bells should be going off at the European Central Bank as a result of rising numbers of COVID-19 cases which pose a dire risk to the Eurozone, a financial analyst has said. Eurozone business growth ground to a halt this month, throwing the economic recovery into question, with fresh coronavirus restrictions pushing the services industry into reverse, a survey published today indicated. IHS Markit's Flash Purchasing Managers Index fell to 50.1 in September from August's 51.9, only just above the 50 mark, which separates growth from contraction and well below the median forecast in a Reuters poll for a modest dip to 51.7. The renewed downturn in the dominant services sector, which is likely to be hit harder by new constraints on activity imposed across the 19-country Eurozone, more than offset the strongest manufacturing growth in 2 years. Bert Colane at ING said, "Alarm bells should be going off about the pace of the recovery at the moment as the number of new COVID-19 cases has been flaring up. For governments and the European Central Bank, this will be a wake-up call, if they needed one." Stringent lockdown measures aimed at halting the spread of the virus brought economic activity to a shuddering stop at the height of the pandemic's first wave in the spring. Most measures across Europe were relaxed as infection rates fell sharply, with recent data suggesting the continent had coped better with the coronavirus-induced recession better than initially feared. However, Wednesday's survey of private sector businesses suggested the recovery is grinding to a halt, at least outside the German manufacturing sector, said Jessica Hines at Capital Economics. She added, and with no sign the resurgence in virus cases has been stamped out, there is a clear and growing risk it goes into reverse, at least in the countries worst affected by the virus. The flash PMI for the Eurozone service industry dropped to 47.6 from 50.5, significantly below the most pessimistic forecast in a Reuters poll, which had predicted a reading of 50.5. Manufacturers fared better, with the factory PMI climbing to a just over 2-year high of 53.7 from 51.7 and a median forecast of 51.9.